In the past years, we've reported 2 of California's major health insurance companies have announced double-digit rate increases. Both were ultimately scaled back under enormous public pressure. Well, now there's a movement to allow state regulators to say no to unreasonable rate hikes. And 7 on Your Side's Michael Finney is here with the story tonight.
Well, as you guys know and have reported on so many times, California regulates auto insurance rates under Proposition 103, which is credited with saving consumers billions of dollars. So, should we do the same for health insurance? That's the question in Sacramento, where a big hearing is scheduled for tomorrow. If you drive a car in California, you must have auto insurance. The law demands it. And because of that, at least in part, California regulators control your rates. Well, soon you'll be required by federal law to carry health insurance, too. However, California regulators can't control medical insurance rates. They can only give their opinion about them. Now, a bill in Sacramento would let regulators, for the very first time, approve or reject health insurance rates.
And we have a new federal law that says health insurance companies are going to sell products that we all have to buy in 2014. So it only makes sense that the government needs to make sure these health insurance policies are affordable.
Talking about rate regulation when really the insurance, all the insurance costs are 15 to 20%, really is a distraction and an expensive distraction.
Jamie Court of Consumer Watchdog and Patrick Johnson of the California Association of Health Plans argue on opposite sides of Assembly Bill 52. Here's what that bill would do. Under current law, insurance companies are required to notify state regulators and justify any rate increases. The regulators can declare a rate hike unreasonable, but they can do nothing to stop it. Under AB 52, state regulators would be authorized to approve, deny, or modify rate changes. Anthem Blue Cross and Blue Shield of California came under fire last year for proposing double-digit rate hikes. Anthem raised individual premiums an average of 16% in May, even though regulators called it unreasonable. Blue Shield backed down after public outcry over its plan to raise rates by as much as 59%.
Without giving the government regulator and in California the power to say no to excessive premium increases, Californians will not be able to afford their health insurance premiums in the coming year.
Consumer Watchdog says states like Maine, New York, Oregon, and Massachusetts have seen lower rate increases since they began regulating premiums.
By imposing a rate cap while politically popular, all it does is suppress rates and may end up with some doctors not being able to continue to get insurance payments and therefore provide coverage.
On the other hand, the California Association of Health Plans says capping premiums will reduce funds for vital medical services like emergency rooms and medical tests. It says 85% of premiums go to medical costs. Premiums go up because of higher costs, and to pay for services that are not covered by Medicare and Medi-Cal.
It's a mistake to oversimplify in the interests of politics.
Regulation works to keep insurance companies honest and hold down health insurance premiums.
The bill to regulate insurance rates has a key hearing tomorrow on the floor of the Assembly and then on to the Senate if it passes. Now, similar bills were vetoed by Governor Schwarzenegger, but this one would arrive on the desk of a new governor, and if it gets there, it's expected to be signed.
All right, we'll see what happens at these hearings.
Yeah.
Michael, thanks.